Welcome back to Franchairs. Today we're going to talk about the rise of retail in the alternative investing world. Now, if you're not familiar with alternative investing, these are assets that you can invest in that are outside of traditional investments, things like stocks, bonds, or cash. Alternative investments include things like real estate or gold and sometimes franchises. Today we're going to talk about why the big shift to retail and how they've evolved over time. In the past, alternative investments were only available to those high net worth individuals, typically called accredited investors. In the past, alternative investments were only available to accredited investors. An accredited investor is someone who has an income of at least $250,000 or $300,000 if they're married, or they have a net worth of at least $1 million. The reason for this was a couple of reasons. One was that they are typically more illiquid investments, meaning that you can't go and buy and sell them like you can stocks. The other reason is that they typically have a long holding period. So what you invest, you have to be prepared to keep invested for many, many years. So why has this changed and how is this now available for retail investors and everyone in between? If you remember Kickstarter, you were able to crowdfund into individual companies so that you'd get a piece of their product early on. But more and more people were hoping that they can invest in the company itself. But you weren't allowed to do that because that would violate securities laws. So Congress got together and created a new law called the Jobs Act, or Jumpstart Our Businesses Act. The Jumpstart Our Business Startups Act of 2012 started allowing people to crowdfund and get equity ownership in different businesses. This started to become applied to actual investments. One of the first in the space was Fundrise. Fundrise allowed individual investors, retail or accredited, to invest in commercial real estate. And again, commercial real estate, you typically had to be an accredited investor to get a piece of. There's different regulations within the Jobs Act that allow for different amounts of money to be raised and whether or not they're just for accredited investors or if unaccredited investors can invest as well. In addition to this regulation opening up the doors for non-accredited investors to come in, there's also been a lot of advancements in technology that allow for the creation of platforms for investors to come in, select their investment, submit a wire or ACH transfer, and then be able to come and get their dividends paid out afterwards. Besides opening the doorway for people to invest in alternative investments, the other thing that happened was the market itself. The stock market started becoming way more unpredictable, and especially when the pandemic hit. People started treating the stock market like it was a casino. They weren't able to bet on sports, they figured the stock market was the next best thing. And when your retirement's at stake, you don't really want to be betting on the same thing as degenerate gamblers are. So people started moving their money into other types of alternative investments. Another one was the historically low yield of bonds. So with all these factors there, people were now able and wanting to invest in alternative assets. The benefits of alternative investing include things like diversification. Diversification is one of the main reasons people love alternative investments. They're no longer susceptible to market influence from the stock market based on what people are tweeting. Instead, it's actually based on fundamentals of what those investments are and what the underlying performance is. Gold is worth what gold is worth, real estate's worth what real estate's worth, and things like franchises are producing income at what they normally do. Additionally, you don't want too much exposure all in one asset class. It's really important to be spread around between different types of investments. Franchises offer stability compared to the stock market, partially because there's a national support system in place for it. Franchising is the newest type of asset that's becoming fractionalized in the market. Part of the big demand for it is because there's such high barriers to becoming involved in a franchise. You either need 6 or 7 figures of capital laying around, and even if you do, you need to leave your full-time job in order to manage it. So fractional investing allows you to gain into the ownership of it without having to do all the legwork. At the same time, you're supporting entrepreneurs by investing in these franchisees that are looking to expand their businesses. That's why we created fractional investing in franchises with Franchairs. Franchairs is the very first platform that lets anyone invest in franchising for as little as $500. This allows you to earn passive income, hedge against inflation, diversify your portfolio, and have a flexible investment size depending on what type of franchises are out there for you to invest in. Alternative investments are already almost a $14 trillion industry and continuing to expand. So what other types of alternative assets should we talk about? Let us know in the comments, hit like, and subscribe.